Moving swiftly onward, we'll say just a few words about tax treaties, at least the outbound aspects. And I guess one of the principal points I should make is that in the next course, if you're interested in it, we will spend a lot of time on tax treaties and go through the OECD model treaty primarily on almost a article-by-article basis, and we'll spend at least 2 or 3, if not 4 sessions doing that. So it's a major part of the next course. From an outbound aspect, when you look at tax treaties, I think, in my mind, one of the most important issues is what I'll call certainty. There's an ability to find a common definition of a term. There's an ability to find a stated sourcing rule that both countries are agreeing to. You're finding, let's say, situations where the domestic rules of 2 countries just don't work well together. They have different rules, and the rules become common. And as a result, you end up with an answer that is used consistently by both countries. Now, why does this make a difference? Well, if you're taxed on one item of income in another country, and the U.S. looks at it and says, gee, we're treating this as U.S. source income, not foreign source income. Well, gee, I'm not going to get a foreign tax credit for the tax I paid to the other country. Or if items are classified differently, you can end up with a lot of mismatches. And treaties will very often cure these mismatches. One area of particular let's say recent development, by recent I mean over the last 10 or 12 years, and with a lot of acceleration in the last maybe 2 or 3 years, is this exchange of information. There has been a great pressure coming initially from the OECD and from the US, specifically regarding a dislike for secrecy, for a dislike for laws that prevent one government from learning something about another. I don't remember who it was in the class, but somebody had brought up, I think, in connection with our friend who is no longer in office in Egypt, Mubarak, as to Switzerland's ability to, go ahead and grab at Mubarak's assets, figuring that there would be maybe a desire eventually by Egypt for some of those assets. This is not so much in the context of specifically a tax treaty, not at all, but the basic concept that countries are increasingly feeling that other countries' bank secrecy laws or rules that allow tax evaders to hide, this is something that is a problem. And on a worldwide basis, this is being addressed by having a much broader exchange of information in tax treaties and in specific other agreements between countries. Now, whether this will get to the point where there's broad information given without being asked, that's a while coming. We don't see that very often. But the basis for that is primarily in tax treaties. I think a particularly interesting area is the question of whether, if you have a client, for example, and he's doing something that involves taxation in another country, and you look at the tax treaty and you say, hey, there's a benefit here, is there something you have to do before you can conclude, yeah, he should get that benefit? In other words, if it says it in a treaty, does the taxpayer automatically get that benefit? So, just looking at some of these things, there's a real issue when you look at your taxpayer of whether he's necessarily resident in the United States for purposes of the particular treaty you're looking at. Now, if your client is a corporation, a U.S. corporation, then it's generally going to be pretty clear. I say generally. Not always, but generally is going to be pretty clear. Reason it might not be very clear is because maybe although a U.S. company, maybe there's management activity being conducted somewhere else in another country, and that can affect the definition of residency under the treaties. What about an LLC? An LLC, if it's a flow-through entity, normally will not itself be a resident for purposes of treaties. And treaties generally are not written to necessarily answer the question of what happens if a transparent LLC is the named entity which is earning income. So LLCs can be problematic. What about partnerships? Same thing. A partnership is not a taxpayer for most countries. And therefore, if it's not a taxpayer, it's not a resident for purposes of the treaty. The partners might be the resident, might be the taxpayers, but they might be residents somewhere else. Also, with regard to LLCs and partnerships, you can imagine there's a great deal of practical difficulty to get another government to grant treaty relief if you've got to come with all sorts of documents saying, gee, the income was earned in the name of this entity, but the real people who are behind it are these other people. It becomes a practical issue. So it's not an easily solvable one. If your U.S. corporation has a branch in another country, for example, a Hong Kong branch of a U.S. bank, does that Hong Kong branch get the benefit of the Hong Kong-China tax treaty? Well, that's an issue. So anyway, there's a lot of situations where it will not be clear as to whether your taxpayer gets the benefit. You cannot assume that they do. You can have situations where there's, in a sense, a worse answer under a treaty than there is under domestic law. Well, which one takes precedent? It's going to depend on the country and what the law and practices in that country are. Anybody know what the rule is in the U.S. with respect to which takes precedent, a treaty or first in time? Yeah. Now, courts have been maybe a little inconsistent on how they interpret that, but it is a somewhat crazy thing that you can have different applicability for different treaties in the sense that, gee, one treaty was enacted before a change in law, and then another treaty was signed and made effective after. So this can be somewhat confusing. From the outbound perspective, what are the typical uses of the U.S. tax treaty network? Well, obviously, when a U.S. company sells into foreign locations and owns the property at the time that it transfers to a buyer, there's at least an ability of that foreign country to have jurisdiction over income earned from that sale. Now, whether their domestic law taxes that or not, most typically it will not. But tax treaties make it very crystal clear that that will normally not cause taxability. Obviously, reduction of withholding taxes, sale of shares of, for example, a subsidiary. Will that be taxable by the foreign country? Treaties can have a very important effect there. And then from the individual standpoint, if you go on a business trip and spend 3 months in Japan, is Japanese law going to tax you? Well, maybe it does under domestic Japanese law, but will you be covered by the treaty and perhaps avoid Japanese tax? So these are, I think, the most typical uses. Last point on treaties is this point regarding interpretation, that there really is no good comprehensive research source. And for the U.S. law, you can sit down with your Lexis or your Westlaw, and you can find a ton of stuff, probably more than you ever wanted to know about a lot of different things. But if you really need to examine, for example, whether there's a permanent establishment in a particular country, and that country itself has no guidance beyond its basic law, which says, gee, permanent establishment is, conducting business on a regular basis or what have you. And you have a particular situation, factual situation, where it's not so clear. Well, there's no comprehensive ability for you to look around the world and see what various governments or courts in various countries have decided. Now, these items will not be binding, of course, on your particular situation, but these kinds of things can at least give you an ability to make a logical, persuasive, reasonably well-based argument. If you can find rulings or court decisions, what have you, from various countries that have dealt with some situation that is sufficiently close to your fact pattern. But there's no source for that. If you wanted to really do a proper research job, you'd actually have to contact local counsel in some number of countries. Now, depending on the importance of the issue, maybe it's 4 or 5 major countries. Maybe if it's really important, you could choose 50 countries. and ask local counsel in every country, gee, are there any official documents which govern, which might give guidance on this kind of situation? So to do real treaty interpretation is not easy. And again, we'll talk more about this next quarter.